Hey YouTube, today is Monday. Happy Monday. I hope you had a great weekend. I had an amazing day yesterday at church. We were into it, so it was a beautiful day. Also, yesterday I made a video, and I'm going to call these videos that I'm going to try to do about once a week, a thought for the day. I'm going to try to get it out on Monday, or if I can get it out earlier, Sunday. They shouldn't last very long. They're only probably going to last about 10 minutes, 15 minutes, somewhere in there. But these things are going to relate from a scriptural aspect to people. And I'm going to tie in how those things relate to our trading. So I'm going to try to use some basic instructions before leaving Earth and make it applicable in a way that impacts our trading. So in this thought for the day, it talks about, or I talk about how do you speak to you, and the power of the tongue and the impact that that can have on your future vision, your life, and ultimately, life or death, because there is power in that can bring about your life and your death. So the short that I took from this message took off. But what I'm finding is that people are looking at the short, but they're not going to the channel to look at the complete message. So I'm wondering, and I'm going to talk to a couple of people, is there something that I can do, maybe in the message, direct them to the message from the short? So we'll see what happens. But the real meat and potatoes of this message is not in the short. That's kind of an appetizer. It's in the actual YouTube video 10-minute message. So that's a little spiel on that. I'm trying to flow that. So let's look at today. When I started looking at the charts, I started looking at the charts roughly about, I'd say about 9 o'clock, somewhere in that area. I peeked at them earlier, didn't see anything really happening. Actually, it was a little earlier than that. It was about 8:30. So I took a peek at it, and I didn't really see anything that caught my eye. And we were getting closer to 9 o'clock at that time. And that's 9 o'clock is the third hour in the 4-hour candle. Okay. And on Mondays, I typically try to, and I'm sometimes, most times, not smart enough to trade later in the day. But to me, I have had the best success trading later in the day on Mondays. I call Mondays manipulation Mondays. Because I tend, if I'm going to lose in the week, it tends to be on a Monday, and I tend to try to trade the consolidation that Monday is typically going through. It doesn't all the time, but most of the time has been my experience. So I did look at the charts. I did my analysis prior to taking a trade today. Let's look at the analysis real quick. So let me bring that up. So, as you know, we always start with a top-down analysis. And different people's tops are going to be different, okay? I like to look at the week, starting from the week. Now, I mean, I'm sort of an intraday scalper, if you will. And I'm not going to be, I don't want to be in my trade longer than an hour if I can help it. If price is going to hit TP, then I'm out and I'm done. If I find that it's going to take a little bit longer, but I see a target that I know that NASDAQ likes to hit, then I'll stay in the trade longer. But I'll definitely be trailing that stop loss up or down, depending upon what it is. So the analysis says that the week is bearish, so that means that there's a bearish candle for the week, and that bearish candle is pulling back. So the week was bearish and there was a pullback involved, and that candle was the day. So the day was bullish and it was pulling back into the downward, the lower highs and the lower lows. It was the bullish candle was pulling back up into it. And the day opened and had a bullish Judas swing and was moving strong bullish. It was below the 21 EMA, and looking at the 4-hour candle, the 4-hour candles were making higher highs and higher lows. There were 3 4-hour candles that made higher highs and higher lows, which indicates to me that if you have 3 consecutive bullish candles like that, then you're pretty much bullish. Price was above the 200 moving average. We've been talking last week, the 200 moving average price was below that and had that little inverted cup thing going on, and I kept trying to trade against the trend and it kept getting cooked. So if I had traded, stayed underneath the 200 EMA, that's a confirmation, not a signal to buy. It's just a confirmation to buy or sell. If I had stayed under and took sells, I would have been more successful. So my overall bias for the day, take buys. All right, so about the time that I started looking at the charts was right about in here. Okay. So I stopped looking at the charts because this is pretty much ranging. And then while I wasn't looking at the chart at the top of the hour, it was 9 o'clock. In the 9 o'clock hour, you have volume starting to creep into the market. You have the 9:30 open, which is going to be pretty volatile. So I said to myself, since this is Manipulation Monday, then why don't I just wait till after the 4 o'clock? The 4 o'clock 4-hour candle closes at 10 o'clock, because I didn't want to go into a trade at 9:45 with a 4-hour candle. That last half hour of a 4-hour candle, it can play tricks on you. So I just said, let me just wait till after the new candle forms, and then ideally that first 15 minutes, based on my experience, I typically try to stay out, because price is kind of doing some consolidation or manipulation, and so things sort of kind of settle down about 10:30. So after that first half hour kicks in, by that time price had made a move, and I missed the move because I wasn't really looking at the chart at this time. At the 9 o'clock hour, I missed this move, and then I started looking at price right around here, and this would have been let's see, if that's 9 o'clock, this 10 o'clock would have been somewhere in here, and it was pretty much too late by then. And before I made a final decision not to take a trade, I looked at the size of the move. Okay, so what this little indicator does is it tells you how big. This is the 1-hour candle, so this would have been the 10 o'clock time period right here. So yeah, again, started ranging. So this kind of tells you the size of the candle. And given that this candle had moved some from the beginning of the day to where I was in terms of price at 10 o'clock, the candle had moved roughly 310 points. And as you can see, when you look at the size of this candle, the current hour, and then you look at these other hours, those moves pretty much were over. So once you have a big move, you get smaller candles. Big move, sometimes you get a big candle in there, but you get smaller candles. So consolidation, my way of thinking, consolidation is like a pit stop. It's picking up stops to fuel up to make a big move. So in that consolidation, it's picking up liquidity, picking up buy stops, picking up sell stops, and as it's getting those stops, building that liquidity, now it's got enough liquidity to make a big move. So pretty much missed the opportunity to get in a trade. Tomorrow's another day, and we'll take it from there when we get there. So let's look at that. No red because there was no trade. So no trades today. Hopefully we can catch something tomorrow. The profit and loss for today is 0. So we didn't take a trade. Sometimes I always say it's better to be out of a trade than in a trade you wish you were out of. So, sitting on your hands sometimes is the best thing you can do. And it's taken me years to figure that out. I always thought there was a trade opportunity. And yes, there is for someone out there. But when you don't see your setup, when the move is already past you, and you're getting towards the latter end of the trading session for London, and you're getting towards the lunchtime for the US, volume sometimes tends to die down. I am trying to make sure that if I see my setup, take it when there's the best opportunity in the trading windows that I kind of just went over. But if I get past 11:30, my trading plan is telling me, yeah, just hold on till tomorrow. Maybe you'll catch a nice big one tomorrow. So unless there's some kind of serious news that's coming out, sometimes interest rates and stuff like that come out at 2 o'clock in the afternoon. Maybe I'll take a trade then if I see a decent setup. But outside of that, if there's no news and it's later in the day, for me, based on all of the losses that I have taken around that time frame, it's better for me to stay out. Okay. So the trade journal, let's go back to that. No trades. Let's take this back up. Cut to there. So no trades today. I gave myself a dub today because I was disciplined enough to stay out of the markets after, especially, and then, I did my due diligence by looking at it and say, well, is there an opportunity? And I looked for reasons to say, yeah, there's no opportunity here. For example, taking a measurement of the 1 hour candle there, and the overall day points that were moved on NASDAQ. So this is the time frame, and that's it for the journal. Gave myself a dub. So today, I think, is going to be the last day I talk about market structure. Okay. And the reason is, for the most part, there's not a whole lot more to talk about. But I hope today's discussion on market structure will put a cap on it. What you're going to have to do is practice mapping out your highs and lows, and kind of train your eye to know the difference between an intermediary high swing high low, and kind of catch the wave of the impulse, and you know figure out where that pullback ends, and that once you start practicing that, your eyes will get used to trading on market structure. And then once you become an expert on market structure, then you will be able to take off. And the better you get at understanding market structure, the lower you can drop your time frames to take trades, right? And the lower time frame trades give you the smaller stop losses, so you can have those sniper entries in order to give you a big bang on your dollar. So I'm not there yet, but I'm coming. So let's look at, the other day I kind of laid out, this is a bullish trend. And since I'm a trend trader, when I see a market structure like this, then and especially if I'm like right around here, if I see a market structure like this, then I know that's enticing. I know that that's something that I could probably take advantage of if I don't do stupid stuff. So here is a zone here. Okay. There's the impulse. Here's the pullback. Impulse. And you notice that impulses are going above the swing high that's here, that's been established here. And they're putting a body on things. See the bodies that are being put on that? And then there's a pullback, another impulse, pullback, another impulse. So, and then the pullbacks are your zones, right? Okay, right here and right here. And this happens to be the pound Aussie. So this works on, this market structure works on every tradable instrument. Market structure is also the foundation for every strategy. That's why I don't talk about strategies. You use your own strategy. The key is to figure out where to apply it. And once you use market structure, I think you'll get a more or a higher probability trade. So Dave teaches that you use a fib that is going to, and I'll give you here's the fib. This is the setup. So 0, 70%, 30%, 50%, and 1. So those are the 3, 4, 5 points of contact on this fib, or 5 points of measurement on this fib. Okay. Everybody got a picture of them. This is Dave teaches here. So right as the trade is pulling back, and as you can see, price pulled back to the 70%. That's a good pullback. And it created a body on the high. This high that's right here. This high that's in the circle right there. Created a body on that. Then it respected. And for those that are support and resistance traders, you can see support and resistance here. So that looks like a support and resistance trade, right? So for you support and resistance traders, what you would do is when you have a breakout of this support and resistance. Now Dave says, And this is a 1 hour candle. Let's pretend these are 1 minute candles. This is a 1 hour candle. So that's why those points look so high. So let's call this 21 points. Okay. Now Dave says go back to the back of the zone for the best entry. So that's a 56-point stop loss. And then you would have to figure out where you would want to exit. That's up to you. Let's say you decide to take this swing high. Okay. Well, really, if this is the 1 minute candle and you decided to just take, let's say you decided just to take the trade to the close of this fair value gap right here. Okay. Then what I would do, Dave teaches go to the back of the zone. But what I would do is I would shorten my trade to at least this swing. I think that's a swing low. But at least this low right here. It's not a swing low, but there's a little bit of a consolidation in there. And, you know, this area here has been the only thing that hasn't been really mitigated. Let's see, let me look. This price only tapped on this fair value gap. So there's some resistance, or I should say support there. And it's been tested. There's one candle that could have gone in there, 2 candles that could have gone into that fair value gap, 3 candles, 4 candles. And it looks like price has found support right here. So, and if price is coming past this low and puts a body on it, you know you're in trouble. And this is all part of managing risk. You know, if you put a body on that swing low, price has decided to move in a different direction. So the way I would play this trade is I would try to tighten as much as I possibly can. I might even go to like that point. So that's a 26. So you see how we went from a 1.25 RR to a 2.21 RR. Okay. I would not necessarily, whatever you decide, let's say you decided that you went to the back of this zone, and that's where you're going to place your stop loss. There's plenty of time to get out of this trade if you're going in the drawdown. There's plenty of time to get out. You just have to have the courage, and you have to have the discipline to not take more drawdown than you have to. I'm still working on that, but that's what you have to, do. So I would, if this is a 1 contract with you based on your account size, if this is a 1 contract, if you tighten up your drawdown to right here, I would stay with 1 contract, maybe 2, but I wouldn't go much higher than that. You can always enter 1 contract, and if the trade is really looking good, and once you see that you're in a spot where if you entered another contract and it came back on you, and you place you place your stop loss so that it kills the trade, so that you get a little something more than nothing, then you can do that. And then when it takes off, like I say, you could probably scale in right here. As soon as the body is put on this swing high, go in with, you might want to go in with another contract and then take it on up to this area right here, over here. Okay, there it is. So you get the idea. This is where you would take the trade. You got to figure out, because it's your money, it's your decision. You have to figure out where you want to place your stop. Dave teaches one thing, but Dave shouldn't have the final decision on what you do with your trade. So he's speaking to the masses. And you have to think for yourself. You're an individual. You take care of the trade the way you take care of it. And if you get cooked, then maybe you know, instead of going down here, instead of going up here, if you're getting cooked with this, you know, idea of how you're handling your stop loss, maybe you give yourself a little bit more room. Okay. That's market structure. So impulse pullback, the area that you would take your trade is, that's not what I want. The area you would take your trade, and you have to get your confirmations. You have to get your see what price action is doing. See how price is reacting to different POIs. And once you get all that put together, then you know you're good to go on your trade. So this is something that it takes practice and it takes time to get your arms around. But this is trading with the trend. This is trading market structure and giving you a higher probability of a winning trade. All right. That's all we have for today. I hope we can catch something big tomorrow. Let's go.